Okay, here we are, end of Tuesday on the 20th, and I was going to do a written post, but decided that this would be easier. I got a lot going on at this end, so I want to keep this going. Probably notice a couple of differences. First of all, I've got a little color today. Not only did I get some sun over the weekend in between various tasks, but I realized I wasn't feeling particularly well when I did the video last time. So anyway, someone mentioned that my energy level was a little low, and that may be why. So, I thought I would talk a little bit about, and I don't normally do this, but talk a little bit about the market today. And I'm not doing transcripts in terms of recapping that way like I did last week. But I guess I wanted to share some of the thoughts in the room and reinforce some things that are pretty important to me. Some of these we certainly reinforce during the live training efforts. But one of the rules that we have is we call it a no fade rule, and we put that in place at about 3:45 Eastern. And the idea is to safeguard yourself from getting caught in a situation where there's just not enough time in the day to take advantage of what might be temporarily overpriced levels. And in doing so, recognizing that you may lose a trade or two along the way, but you'll save yourself from a great deal of heartache. And one of our jellies from the first team, our NFL quarterback who still trades with us, came up with the term IFT, which stands for inverse fade trade, which is in the jelly speak tab up top. And that was actually taking advantage of the no fade rule, but doing it in reverse, basically positioning for the trend move. And that's kind of tough because it doesn't always work out. But by not fading it, you typically keep yourself out of trouble. And that just comes from personal experience, knowing that there are going to be a handful of days each quarter, perhaps, that will do that. And the challenge is you just don't have any time left in the day to recover, to get a good price from a profit potential perspective, and B, if you do any psychological damage to yourself, you're carrying that over in the next day. So, most people know by now that I make most of my keep on MATDs, morning after trend days, which are setting up for tomorrow, given the trend close. We're hoping it sets up like it's set up on Monday. And anyway, I just want to share that in terms of some of the things we were trying to do toward the end of the day. People were coming up with some creative ideas to keep people off the short side, and there were still some wholesale short opportunities contra trend from a liquidity providing perspective, which were profitable. But the rhythm certainly, once we blew up past, get my charts out here, 1070, really there weren't any reversal signals. There were just wholesale contra trend channel type entries, which we'll certainly trade from time to time. So. That was one of the things that was going on today. I certainly shared. I was a bit surprised. I was initially a bit surprised in the afternoon that we blew up through 1070. But the more I looked at it, the more I really wasn't. Or I'm sorry, 1075. Because we actually did pause there for an hour or so, and it provided some good initial resistance in terms of trading opportunities. But certainly to the extent that we blew through there, I was a bit surprised. But again, it doesn't matter, what I think or what anybody else thinks. You go with a tape read. It's always been my mission from an education perspective when I'm working with traders and I was talking to somebody who's going to be part of the upcoming effort to basically, make people better tape readers. And really understand market bias. What's the market likely to do at any given point in time, and really today it was kind of a moment by moment thing. We had a lot of what we call cup formations. Once the selling subsided, we had a little bit of IIAGD, again going back to the acronym. So if it ain't going down, what is the path of least resistance? What is happening? And certainly we tested the hourly downtrend a couple of times. But beyond the second retracement, after that, usually all bets are off, especially when the larger trend, which is the daily right now, is trying to turn. So you know, a bit surprised, but really not. You know, and using the lesser time frames, I thought was very helpful today. And I called it a little bit. It was like whack-a-mole in reverse, because the shorts tried to have their say in the low 1070s, but they you know, they couldn't push the market down. So you know, you just can't get locked into you know, something that might have worked that you know, yesterday or the day before. As strong as that selling was, and as strong as some of those resistance levels were initially, you know, you can't turn through them, obviously. So again, you know, just hoping that the people today, you know, traded smart. You know, it's not always the easiest pattern in the world when you're blowing through sequential resistance points on your various time frames, because you've got this transition period, which is really a flip of the coin. So you know, what I often try to do is just you know, try to sit out that transition period, and then, you know, if the squeeze occurs, try to align with the squeeze, or if you start seeing air in the patterns, you know, get some wholesale short opportunities, which certainly we had in the first approach to a 1075. So you know, those are some thoughts, I guess, in terms of the sorts of things that we talk about. Again, last week I did the transcripts. Again, I hope that was helpful for everybody. What else is going on here? Really, trading, preparing for the upcoming course. I've got a good group of people. There are still spots open. If you're interested, again, it starts the Tuesday after Labor Day, and we'll go through October 1st. And Robin will be there with us. And what else? Doing some redecorating on the site here in terms of personal scorecard and tracking type of stuff. And I'm trying to get actually a whole page to do that. So I've taken one of the dangers I have of having that consistency stat up is that if you or if I keep staring at that, there is a tendency to you know, it's only one component. It's a tendency to you know, optimize that particular measure, but sub-optimize what's most important, which is P&L. For example, I mean, you could have one or two really good days, and just sit on that and have something that looks like a really good gain to loss ratio, but it just doesn't cut it. And you know, I know, and this happened during the first quarter of 09 when I had I think it were the 3 losing days in the whole quarter. You know, I subconsciously started getting, you know, a little bit into, okay, well, let's keep this going, when, you know, I would rather have a large hit and be able to come back from that in terms of a bottom line. So you know, the type of trader I am, I tend to trade at best from a P&L perspective when I'm very aggressive. And so I've just got to balance out the consistency measures, which I was focused on for a period of time, just to get the P&L, you know, get the summer going and coming back from May 6th and all that kind of stuff. But more importantly, focus on things like, are you appropriately aggressive during those opportunities, regardless of how the trade goes? And that gets back to the scorecard that we used during that first quarter as well, that I'm going to try to resurrect and put on that page. So look for a performance type page coming soon. And that's where I'm at. Hope you had a great trading day. MATD tomorrow, and we will catch you then. Take care.